Okay, great. Well, folks are still logging in, but I'm gonna go ahead and get rolling here. Um, the Welcome everybody to this edition, I guess, or episode of the Interactive Dialogue. This is a program or a format in which we find an expert on a topic, which we've absolutely done today, and then interview the person about the area of their expertise. So, very excited to have everybody on board. A little bit of just some of the housekeeping matters. The materials were sent to you, the PowerPoint presentation. We did find a typo, thank you, Rima, on one page, but not a material one. And we included with that the sign-in and other information. So you should have all the materials at your fingertips. Likewise, this is an interactive program, and we do have questions available through the chat pane. I'll be monitoring that, and we'll weave your questions into the presentation itself. If you'd like to have it be confidential, then just say confidential, and I'll make sure to do that. Otherwise, I try and keep them confidential, but I might mention the first name or the like of somebody. It looks like Brooks already found the chat pane, so that's terrific. So if you do have any questions for either of us in the program today, just make sure and ask them in the chat panel. And then I'll be referencing CLE information and such a little bit later on in the program. So I'm Mike Droke, a partner in the Food, Beverage, and Agribusiness Group, and actually the co-practice leader for our 200-lawyer firm-wide food and agribusiness industry group. And that's probably all you need to know about me, because the person of the hour is Tom Halverson, who's the CEO of CoBank. So, Tom, I mentioned this before. I've had other CEOs on in the past. I've had bankers that I've interviewed, but I've never had someone with a PhD in military history. So there you have it. You're a first.
It's either, as I said, it's either a very high bar or a very low bar. You guys can all decide at the end.
Awesome. Well, can you give us a little bit of your own personal background and history, and then also tell the audience about CoBank and its role?
Sure. Thanks very much. I'm pleased to be here with all of you. Thanks for the kind invitation, Mike. I'm at great risk, having been called already an expert on ESG. So I have a lot to do here. A little bit about me. I come from a family of farmers in north central Iowa, and I must have fallen and hit my head as a child because I fell into the clutches of the financial services industry many years ago, and I have yet to escape. So I spent a lot of time overseas, 16 years overseas. I worked 17 years for the Goldman Sachs Group in London, Hong Kong, and New York, but I found a way back to my roots when I joined CoBank 9 years ago. I have a tremendous privilege of leading this amazing organization, which serves customers in agriculture and agribusiness all over the country and around the world, as well as providing financial services to other vital rural industries, including communications, energy, and water, which is fantastic. We CoBank are the largest institution in the Farm Credit System, which some of you may know is the original government-sponsored enterprise established in 1916. We have a national footprint in the industries that I described. We're the largest of the many institutions in the Farm Credit System. Our balance sheet's about $175 billion, and the biggest single piece of that by a meaningful margin is agriculture, broadly construed. So we have a big footprint and a lot of exposure, quote unquote, to climate issues in all of the industries that we serve.
Yeah, I was fascinated as we think about this this topic, that the impact of agriculture is really important in this particular question. And I was fascinated when I attended in February the legal tax and accounting component of the National Council of Farmer Co-ops annual conference, and literally every program had some component on ESG. And I have an inkling that you might have been, you were a keynote speaker at that presentation, but may have had even a significant role, at that time.
Well, that's true. I happen for my sins to also be the chairman of the board of the National Council of Farmer Cooperatives. So had some hand in the establishment of the agenda for the annual meeting, as you can imagine. But I think it's worthy for all the reasons we'll discuss here in our session this morning, because it's affecting all of our industries. It's affecting everybody in every nook and cranny of agriculture, whether they're conscious of that or not.
You know, the other aspect I found fascinating in your keynote presentation is that CoBank is in some ways gets it coming and going. You know, you're both a lender to agribusiness and electrical, rural electric in particular, and other industries, but also you borrow some of those funds from various sources, including you know, many of them. Can you talk a little bit about that role as far as CoBank's concerned?
Sure. As I said, the farm credit system has four banks. We're the largest. We're all joint and severally liable for each other's liabilities. The farm credit system's liabilities are in the zip code of 350 billion US dollars in
Wow.
aggregate. So we are quite large in the senior unsecured bond market. Just the CoBank piece of that $350 billion is north of 150 because we're the largest. So we are the second largest borrower of banks in the senior unsecured bond market for our own purposes, second only to JP Morgan Chase. So we are very, very substantial in the capital markets, and therefore this topic we're talking about this morning matters to us a lot, because what investors and their money managers and other stakeholders want and expect of the issuers and borrowers whose bonds they buy is definitely evolving, and we have to be very knowledgeable and sensitive to their needs and interests.
You know, I was obviously fascinated by your keynote speech on the topic, and then I've been following your writing on it ever since, which seems very prolific. I follow you on LinkedIn and the like, and why is this particular topic of environmental, social, and governance so important to CoBank and your customers?
Well, number one, we are not a commercial bank. We're not a depository institution. We were established by Congress to bank sectors that need reliable through the cycle financing, who would not historically and contemporary not receive it in the way that is needed to support the rural economy and the interests of the country. Why this is so important is that the markets, as efficient as they are, capital markets and product markets, are exceptionally efficient, but they are constantly changing. And the way markets are changing is to pay a great deal more attention to these issues today, and I believe in the future, than they have in the past. Particularly those businesses that are exposed to consumers, where consumer behavior, drives outcome. Now, there are other stakeholders here. There are other interest groups, including environmental groups, including the Congress, including regulators, and so forth. But I'm a pretty fanatical believer in the efficiency and the value of market forces. And the predominant mover in this space is market forces.
And when you say the consumer and market forces, can you give me some examples of how you feel it at CoBank?
Absolutely. I'll give you an example. I happen to be an advisor to the board of something called the Dairy Innovation Center. Dairy Innovation Center is, you can think of it as like the pre-competitive place where the U.S. dairy industry converses about the U.S. dairy industry's ESG strategy. They don't call it's the ESG strategy, but that's effectively what it is. One of our biggest exposures as the Farm Credit System and as CoBank is to the dairy industry. Okay. And the dairy industry, for those of you who don't know this, has made a commitment as an industry to be net zero by 2050. And so each of those institutions, most of which, the vast majority of which are CoBank customers directly, are trying to figure out how they're going to operationalize that net zero by 2050 commitment that they have made. And you may ask me, and I'm constantly asked, well, why did they make this
Why
commitment?
did they make the commitment? Yeah, that's exactly
Yeah,
my
why did
question.
you make this commitment? And the answer is not because they're a bunch of activists who are the CEOs of these co-ops and other industries, or because Congress told them to, or a bunch of environmentalists told them to. No, the real answer to this question is the predominant explanation for why they did it is because that's where the market is going for their products. Okay. Their principal competitors around the world, whether they be dairy companies in New Zealand or France or Ireland or what have you, they've already moved in these directions. And when customers are in the grocery store filling their basket with dairy products, they will pay 2 or 3 times more for a product that says organic or this or raised this way or that. And so they see that happening and they're like, I either respond to that market force or I'm going to lose market share and become less relevant. And for those co-op customers that are CoBank's customers, to allow that to occur is to allow for a serious damage to their owners, who are the 80,000-ish dairy producers all across the United States of America. So they are responding to market forces that are here today and that they think will be unrelentingly more intense in the future.
You know, I know that every once in a while we pick a topic, and it's timely because there's front page articles, and we literally had that experience this weekend. For those listening, the New York Times had an article on environmental issues and agriculture, and specifically talking about the farmers that are changing their methods of production based in part on, and I'd say largely, on pressure from companies like PepsiCo and others, which are buying the products but needing to have explanations as to what their own environmental and climate-oriented effects are. So it's very much a timely thing. And in that article, really the kind of crux of it was, how do you talk the producers into the importance and help them kind of educate for what is happening in what feels like a rapidly changing thing. Is that a fair statement?
It is a fair statement, and frankly, large businesses. I could cite people like Walmart or Kroger, big, retail establishments, or Starbucks, or whoever it may be. When they show up to the people who supply them and say, "I'm only buying your milk to put in my Starbucks coffee cups if it's produced this way." Well, they have a lot of power to implement that in the marketplace. And those are exactly the kinds of things that are happening. So when it gets down there to the producer level, and they get told, well, look, our biggest customer or our top 3 customers are only going to buy X, and I'm producing Y, well, that's a problem for you. You've got to figure out what it is that you're going to do about that. Now, for this transition to be successful, for example, continuing to look at dairy as an example, they need a lot of things that they have to do, but they're going to need help and support to make this net zero by 2050 commitment be realized. They're going to have to make investments of a variety of sorts down at the producer level and at the processor level, at the institutional level, and so forth. That's going to take time. It's going to take capital and resources and energy and expertise. That's our job, and our partners in the farm credit system. We're going to be very focused on seeing that they get access to the capital that they need to make those changes. But for the producers, this has to be done in such a way that they and their production process survives and has the time and space and resources to make those changes and to adapt in a manner that doesn't crush them. And that'll be a very important part of this transitional process.
For me, it almost feels like a little bit of a rubber banding situation of things expanding and contracting on different frequencies. You have this really rapid change in customer attitudes, and therefore the customers of the producer, and then to change production, it takes a while. And as you said, to both implement and then also to make sure it's economically feasible. to do, right?
Yeah, and I think some of the resistance, particularly at agricultural producer level, comes from the fact that producers look at things like this and they say, "Oh my gosh, people are going to throw a whole bunch of additional regulations and costs on top of my production process. I already don't make very much money. How am I going to do it?" Right? Well, the answer has to be that things have to be, voluntary through market forces. There has to be help, and there has to be support, and there has to be new revenue sources and opportunities so that the market force gets translated into profitable opportunities for people that encourage them to go in this direction. And if we can do those things, we can make this transition be smooth and successful. If our approach is to just we're going to regulate everybody to death and make them do what we want them to do, then we're going to significantly harm the proverbial goose that lays the golden egg, which is our agricultural production complex, which is the by far the most efficient, safe, and productive on the planet.
Luke asked an interesting question about the resilience of this change, and you've seen a really significant change, it sounds like, in your 9 years with CoBank on this topic. But the question he had was, is there a tipping point, or do you think consumers have a limit, particularly as the costs, inflation occur? Is there a point at which over on balance, the customers are likely to say, well, yeah, I'd like to have this, but I'm not willing to pay that premium that you described is happening in Europe, for example?
Here's my answer to that. I mean, there's cyclical factors and there are structural factors. Right now, we have the cyclical factor of we have the highest inflation in 40 years. And so if you go to the grocery store, people are pinched, their consumption basket is pinched because of inflation. So they might not buy the highest octane gasoline, they might buy the lowest octane gasoline. Instead of buying the most expensive organic milk, they might buy the non-organic milk. But those are just the cyclical factors because of where we are in the macroeconomy. The real question is, what are the mega trends that last decades? My view is these things we're talking about here are mega trends which will last for decades. So will they fluctuate when you interview consumers in their consumption basket this year because of current circumstances? Yes. But will we have far fewer coal-fired power plants in our electric fleet 25 years from now than we do today? No question in my mind that the answer is yes. Will we be consuming a lot more sustainable agricultural products in 10 or 20 years than we do today? No question in my mind. The answer will be yes. The only question is who's going to be the people who can move fast enough and with high quality enough stuff to maintain and grow their market share while other people get crushed by market forces because they choose not to adapt.
So the adaption aspect is really interesting and kind of tees up a good question: is adapt towards what? And we've seen a variety of different moves by regulators and others in the industry on this topic of ESG. And so I want to spend just a moment thinking about what is ESG. It stands for three different components: environmental, social, and governance. And those three elements are really designed to correlate, really, to some degree, right? You have environmental issues, which often is discussed in the context of climate change; social, in the context of labor use and foreign labor, et cetera; and then governance around how you govern yourself and manage and have financial metrics to the to each of the other components. Can you talk about what these mean from a practical perspective in your world?
Sure, and it's important that we keep a sense of balance here. So far we've talked a lot about environmental, and that's important and impactful. But social and governance are each important. We at CoBank are actually quite thoughtful and have been for a long time in the areas of social and governance. Anybody who wants to go look, for example, at our corporate social responsibility report, which we publish separate from our annual report, will see just how broad, deep, and ambitious our our activities are in that space. And we didn't need, ESG to come along and tell us those things were important, but it gives a different, context for the activities that we're involved in. What we see happening is, I gave you one example from the dairy industry, but we see things happening in all of the industries we serve, and we see action and activity and thinking going on within and among federal regulators here, who are frankly responding to regulators in other places, but particularly Europe, who've gone significantly further and faster than regulators have here in the United States. And so for us, it's been a question of figuring out, well, where do we think this is all going as a bank and as a financial firm? What kinds of things are going to be coming down the road from our stakeholders, from the Congress of the United States, who created us, from our regulators, and frankly, most importantly, from the market forces in the industries that we serve. And the answer is, we're seeing activity on all fronts from all stakeholders. And while the speed and scope of what's coming may be subject to debate, the fact that we're all going to have to do more in this space is beyond doubt.
Can you talk briefly about the governance element and how that fits into your thinking?
Well, for us to be candid, obviously, CoBank is part of a GSE, and we are a cooperatively organized institution. So we're owned by our customers, which, to my mind, gives us a bit of an advantage in the governance context, because we're created by Congress to do certain things that Congress deems to be good for the country. We're owned by our customers, so our governance challenges are a little easier to square than would be so for a publicly traded stock company who may describe their purpose for being as maximizing shareholder returns. Right? We have to run a profitable business and give a good return to our shareholders, but we have a variety of other purposes that we are here to fulfill. So while governance is a tricky one for the world of corporations broadly construed, I think it's frankly less demanding for us at CoBank than it would be for a lot of other types of companies.
I was fascinated by this quote from Larry Fink, who is the CEO of BlackRock, which is the largest private equity and asset manager firm in the country, at least. And I found it interesting that on that end of the governance spectrum, that he's been one of the loudest voices around ESG and the importance of planning for transition to net zero for the companies that they're interested in, that are in their portfolio, and the like. And that said, there seems to also be some growing skepticism around this as equity markets have declined, as Luke's question indicated. And so you'd mentioned that you see this as a mega trend, and why do you view it as a long-term mega trend?
Ultimately, market forces win out in most choices in economic life and business. And I view the ultimate market forces here are a function of how society is evolving. And I think society has evolved in such a way that the vast majority of people in most Western countries, for example, believe that climate change is an issue, and that human beings are a significant contributor to that, and that we've got to do something about it. That's not, you can like that or not like that. I don't really, you don't care my opinion, and your all opinions don't matter very much either, to be perfectly candid. What matters is what the vast majority of people in our country and in the world think, and how those attitudes manifest in their economic life and behavior, and the votes that they cast if they live happily in a democracy. And I think that those things are here to stay, and they are going to drive economic life and behavior. Now, will they ebb and flow a little bit based on where we are in the stock market cycle and the macroeconomy? Of course they will. But I'm pretty confident in certain things that I can say about where we're going to be in 10 or 20 years time, which is we're going to have a lot less fossil fuels in the power fleet. We're going to have quite a big transformation in the kinds of foods that we consume, and we could talk all day about how this manifests in different industries, but that change is coming. The speed and the slope of the curve we can debate, but the directionality is unquestionable, at least to me.
I had a really interesting conversation over the weekend actually about how this all relates to power demand curves and the like. And we have so many shifts happening in electric vehicles and yet which could increase demand, in particular trucking, as that comes online. And then conversely, shifts in demand in the cities where every time an office building changes over, they change all the lighting and really kind of drop the overall demand in the city. So the power is moving from one place to another, and the demands are changing. But it really was an illustration for me of the unpredictability of some of these things as they're changing. So, for example, we're going to need power changing stations every couple hundred miles in rural America. And how do you get that? How do you get that power? Where's it generated? What are the environmental aspects of it? All really shifting around. But as you said, the directionality isn't really up for debate as far as which direction.
Yeah, and power complexes are a really fascinating place to look, because we're we CoBank are a very substantial investor in the power sector, and the rural power sector in particular, which is where much of the coal-fired power plant fleet resides. That happens to be billions of dollars of collateral against our loans. So, I don't want that stuff to go to zero any more than the owners of that stuff do, because it's securing billions of dollars of loans that we've made. But do I think that those assets are going to be retired more quickly than people thought they were going to be retired when they were built, when they have a 40 or 50-year useful life? Yeah, I think so.
So I thought this article was particularly interesting. This is a headline from the Wall Street Journal that came out after the Glasgow climate conference last November, talking about pledges that were happening in the banking industry across the board, really across the world, to incorporate carbon emissions into the most fundamental decisions. What does this pledge mean?
Well, it's a good question, and the individual who runs the UN group that gets all these people to make these pledges is a former colleague of mine who I know pretty well from earlier in my career. And I think this is a place where I will differentiate a little bit from CoBank and the Farm Credit System, which is a GSE established by Congress. Most of the institutions that have signed up to this pledge are publicly traded stock companies or otherwise privately owned, and therefore they have more freedom to maneuver to make a commitment of this nature, where they say that they're going to stop doing certain things, for example, that they deem to be unhelpful to the climate issue. Now, what it does mean, though, is that without question, there are many large, small, and medium-sized banks in the United States and around the world who are changing the way that they make lending and other commercial decisions because they believe that they should, and because they can, and because stakeholders are encouraging them to do so. And that's a real thing. And we have a couple of examples that we're going to talk about here in a moment.
Can you talk about the idea or concept of financed emissions and what that means for banks going forward?
So if you have a concrete business or are in agricultural production or run a steel mill, obviously you have a big footprint of greenhouse gas emissions. Okay, banks generally don't have big footprints of greenhouse gas emissions. We have a lovely headquarters building here in Greenwood Village, Colorado. It's a LEED Silver certified building. Our greenhouse gas footprint is not meaningful. Okay, so the question is, on our $175 billion balance sheet, what's the greenhouse gas emissions footprint, for example, of all of our customers in the industries that we serve who we are financing, right? So there is a mathematical process of trying to figure out, well, how big is the footprint of greenhouse gas emissions that you, CoBank, are financing, or fill in the blank, you, JP Morgan Chase, or you, Citibank, or whatever that you are financing. And that is a process that the banking community is trying to work through and figure out. It is a hard thing to do because these are things that you would classify as non-financial disclosures, much harder to measure, and we're very early in the process of trying to figure out standardized methods of counting and defining. And all of you lawyers understand how important it is in a contract to have a common definition of what it is that you're trying to accomplish.
There's this business principle that that which is measured gets done. And so put the opposite way, if you want something done, then start to measure it. I sometimes say to clients, the best way to solve a problem is to shed a whole lot of light on the problem. And then it tends to resolve itself. So that which is measured is done. And we've listed out here many different ways in which there are legal procedures or ways in which banks are regulated generally. In addition to that, you'll see also several comments related to the SEC proposed rules on climate-related disclosure. Briefly, just from a legal perspective, it's a fascinating time as far as regulation is concerned right now. For those that pay attention to the Supreme Court decisions, the West Virginia versus EPA case came out just a few days ago. That was on really a narrow issue of whether the standard for the best way to approach climate regulation was to look at a national level and regulate kind of from that angle. And the answer was that that power was not delegated to Congress or by Congress to the executive branch. So it was a fairly narrow question as far as the climate change element of it was considered. But it does indicate various ways in which the banks are being regulated and the legal processes by which those are being regulated. So you've talked about your efforts to kind of get the word out to the public generally, and in particular the public that you serve through CoBank. How do you expect this topic to start showing up in conversations between banks and their customers?
Great question, and it depends on who the regulators are of the institution, what kinds of customers they have. I will illustrate the answer through the lens of CoBank and our partners in the farm credit system, because we are not regulated by the OCC or the Fed. We're not a federally insured depository institution. We're established by Congress and under RAGSE. So our regulator is an independent regulator in the executive branch, the Farm Credit Administration. So we're in a little different situation. But we too are providing financial services to institutional customers. We at CoBank do the institutional customers, and the rest of our partners in the farm credit system finance producers, which you can think of as kind of, they're not consumers in the way of like credit card or home, auto loan borrowers, but they're consumers to the extent of actual people who are borrowing for actual business purposes. And how this is going to manifest in dialogue with customers depends on who your customers are and what they're doing. So for us, for example, we're financing co-ops and other institutions who are in the power business, or dairy producers or what have you, and we're in pretty regular dialogue with most of the leadership of most of the industries and customers and all the industries that we serve that I mentioned at the beginning of this. And I get asked all the time by CEOs of large companies who are customers of ours, okay, Tom, this is what the commercial banks are doing. What are you doing? Right? Are you going to tell me that you won't lend money to me for another gas turbine, to throw a couple more megawatts into my power fleet? Because that's what, some of these commercial investors are saying, right? So we're in those kinds of conversations. I get asked regularly, what's CoBank's position on this? What are you guys going to do? Can I rely on you to continue to finance me in the future? And or hey, Tom, out there in the capital markets, people are getting incentivized through their loans to do certain things or not do certain things. What are you going to do? Do you have a product like that? Can I get a 10 basis point discount on the margin on my bank loan if I make certain commitments, to accelerate the retirement of this power plant, for example?
It's fascinating because it's a unique competitive position. You're owned by your customers, and yet your customers are not required to use CoBank, and they are pitched by other lenders, I would assume. And so you are in a situation of having competitive forces that drive the decision, to a significant degree as well, right?
No, that's exactly right. I mean, we're owned by our customers, and we have to compete for their business. And most of our customers get solicitations from others. So we have to have a compelling value proposition, a good product offering, great customer service, and since they're also owners of the company, we have to give them an appropriate return on the equity that they have in the company. And we have to do all of that while making them feel good about the fact that we are, long-term supporters of their industry as Congress intended when they set us up decades ago.
So even if it's not something that's being regulated, meaning there's a government force that is requiring a certain kind of disclosure or percentage of a portfolio, do you anticipate a time where banks will be requiring customers to disclose their carbon emissions when they ask for a loan, just as a general matter?
I think that's a long way away, but I think it may be out there, way out there in the future, right? So let me illustrate why I say that it's that far away. I'm a member of the board of directors of the Farm Credit Systems Funding Corporation, which is the entity that accesses the capital markets for the four farm credit banks, where we get our $350+ billion of senior unsecured bonds executed. And the system has a disclosure model where we are not an SEC registrar. Nevertheless, we largely follow the SEC disclosure model. Okay.
Yeah.
And we've all read, as many of you probably have, the SEC proposed rule on climate, which is something like 500 pages long. So we're sitting here looking at that and going, okay, well, we're not an SEC registrant, but we largely follow after the fact. So if this comes out in the form largely that it has been promulgated, what's that mean for us? Well, one thing we think all of this stuff means is that we're going to have to figure out what our financed emissions are, and we're going to have to use your own phrase, Mike, shine a bright light on that, so that everybody who's a stakeholder can see what our footprint is and what our customers' footprint is. Now, where you go after that, remains to be seen. But I think you've got to do these things in sequence. First, you got to figure out what your starting position is before you leap into okay, so what are you going to do about it? We will, because there are people in Congress or politicians or other stakeholders who see a problem, and they see the banking system as a tool to solve that problem. And so, they see the problem as a nail, and they're grabbing for the banking sector as a handy hammer to bash away. Well, we don't intend to be somebody's hammer here, because we were set up by Congress to support these industries. And our definition of supporting these industries is not going to be to tell them what to do to fix this problem, quote unquote. It's going to be how do we help them to make transitions that they voluntarily decide they want to make for their own reasons. I personally am a believer that market forces are pushing them and will push them all in all of these industries to make these transitions. They will make them at their own pace, but they will make them.
So the lawyer in me has to ask, because you made the observation that setting the standard is often the toughest part, and you made the comment a second ago about setting a baseline, which from a producer perspective is important to know. What's my emission profile right this minute, so that if the objective is to decrease that or make marginal moves towards that, then I know what my starting point was, right? And
Yep.
so that being said, now I hear about and talk to clients with which are in the industry about a whole variety of different ways of looking at carbon capture, sequestration, CO2 emissions, and the like. And so, what kind of practical guidance do you give to your customers or internally about how do you decide what standards to use, what things to measure, and the like?
Well, I start from my first principle on all of those sub questions is basically you must get smarter faster, right? This is a big, complex basket of stuff that if I'm right, we're all going to be dealing with for the rest of our professional careers. So if don't leap to the details of, well, what am I going to do? What am I going to do? Leap to the get smarter and figure out, what the underlying issues are. Start to have views on those. Find out, what kinds of things people are doing, because only then will you get yourself in what I call the ready position to make thoughtful and well-informed choices about what sorts of things you ought to be doing, right? So sequence these things properly. Get smart first.
And apropos of that, the presentation I referenced earlier at the National Council of Farmer Co-ops, the one element of all the programs was that every single person participated in at least one ESG program, whether you were a lawyer, an accountant, a tax person, a board of director member, a CEO, CFO of a farming co-op, you participated in at least one ESG related program to talk about these very issues. Yeah, as you said, getting smarter, faster. you know, uh, we listed out here a couple of other mega trends that are happening in the industry, and really that kind of come from the concept of what's measured and how does it get done. And I was fascinated about the idea that the global ESG loan originations was something that was becoming measured from 2017 to the present, and that there are incentive structures that are happening. Can you talk to how banks are starting to offer ESG linked loan products, and how that trend is working?
Yeah, and, in the capital markets universe, obviously that's a huge space, and these are tiny numbers. What's interesting is the rate of growth, right? And so as you look at the senior unsecured bond market, or you look at the bank loan market and see how big it is, you go, well, what percentage of that is going to take these attributes on over the course of time, and how fast will that evolution occur? And the fact of the matter is, it's actually happening pretty fast, right? And if you go to
Yeah.
a customer and say who has a big, footprint of greenhouse gas emissions, and you say, okay, here's your loan agreement on a plain vanilla legacy construct, or here's your loan agreement with all of that plus a 5 basis point discount if you meet these commitments that you've made. That gives the customer an incentive to perform in a third party auditable, verifiable way, often in accordance with commitments that they're making anyway, right? And so why wouldn't they do that, right? So it's market forces at work, creating a proper incentive for people to do stuff that they themselves think are the right things to do, right? You're not going to all of a sudden change your core business strategy to capture 5 basis points of of benefit in a loan agreement. You know what I mean? But if you're doing it anyway, why not?
I literally watched this happen in one of the presentations where a person who had been, complaining about the changes and other, general commentary, but started to see his own business in a different way. That when the dairy operations changed, or when they were putting some areas to fallow for a year or two, and what was effectively capturing carbon during that time period, that he started to see his own farming operation in a different way, and not changing anything at all, but rather just observing it in a unique and different way.
No, I think that's right. I talk to producers all the time. It's like, wow, you mean somebody will pay me for doing no-till agriculture? I've been doing it for 10 years, but nobody's been paying me for it.
Exactly. So it's you referenced this before. There's a bit of a carrot and stick happening in this world right now, as far as the stick obviously being regulators requiring, but also the carrot being, hey, we have these loan portfolios available, but if you do X, Y, Z, then we'll make this available to you. Read an article recently in the insurance markets, for example, about Beasley, which is a very large insurer, part of the Zurich Group, and has offered additional capacity, same terms, but additional capacity for people with ESG related programs to try and lure them into to their insurance products and such. So can you talk about the impact of Europe and how these kinds of programs, or what's happening, and if you predict that happening
Yeah.
here?
So these are three examples of European headquartered banks that are all have a large international footprint, including operations in the United States in each case. And these are positions that they've taken either for a variety of reasons. Could be regulatory pressure, shareholder pressure, trying to do the right thing in the society where they are domiciled, or whatever the explanations. But these are real things, right? And they have real impacts. And and these are, I'll differentiate CoBank from this. We haven't done anything like this, and we're not likely to, because Congress didn't establish CoBank in the farm credit system so we could run around telling people why we're not going to lend them money, right? But this is the kind of market forces that are out there, and we have seen this in our own customer franchise, where customers of ours who've been customers of ours for decades, in some cases, have lost commercial investors in the form of investment banks and other types of commercial investors for these kinds of reasons. And they've said, well, we've been in your facility for many, many years, but you got too many coal power plants in your fleet, and your plan to reduce that isn't fast enough, so we're out, right? So this is not some theoretical thing you read about in the newspaper. We are seeing it happen right here in the United States. Now, those decisions may be happening because the institution is a subsidiary U.S. sub of a foreign bank that are doing these kinds of things, or they might just be a wholly U.S. business who just, this is where they are in their evolution. And we have, in the short term, always make sure that our customers get the capital that they need, because that's our job. But these market forces are not someday they may manifest. They are manifesting right now.
So you commented on the last slide about just the speed with which that manifestation has happened. At least in Europe, what is it mirroring that velocity of the change?
I'd say Europe is, I don't want this to sound the wrong way, they are further along in this process. I don't say that with some, like, that don't imply that means regretfully I wish we were working at the same speed, right? They're working at their own speed. They started earlier. They're more aggressive, and they're moving faster than we are. I think we have a tendency to be more disciplined in following market forces, and since, in my humble opinion, market forces are always the long-term winner, I think we will hopefully use our time wisely and create incentive structures that work with market forces rather than against market forces. And if we can do that, we're more likely to have long-term success in a sustainable form.
So this slide kind of talks to the percentages of greenhouse gas emissions by sector, and most of the people who are listening in on this program are associated with the agriculture, food and agribusiness sector. Obviously, CoBank is very active in that sector. Can you talk about how likely agriculture's access to capital could be affected either positively or negatively by the ESG investment trend going forward?
Well, the answer is going to be that, any of these sectors in general, agriculture in particular, they're not a monolith, right? So individual producers or institutions are all over the continuum from, on one hand, I'm going to bury my head in the sand and hope this goes away, down to super progressive and early adoption, right? And then everywhere in between. I think it can be a great benefit and a great constraint. There are a number of industries that are effectively, long greenhouse gas emissions, almost no matter how you slice it. Cement, steel, energy, agriculture, right? So if you're going to get to be net zero in one of those sectors, how you're going to do that? You're going to have to buy some credits. The emphasis is on net rather than zero, right? Because you're not going to do it yourself. I mean, like when United Airlines made a net zero commitment, I said, you do know you fly airplanes for a living. That's going to be kind of hard. How are you going to do it?
Yeah, you're not going to do a rubber band and a propeller, right?
Yeah, so I think it's going to be a real challenge, but I also think it's an opportunity. We're going to discover that there are things that we do that we can get, that our customers do that they can get paid for that nobody ever paid them for before. If you can create the right market infrastructure for it, create the right kind of pricing and market infrastructure, we're going to have whole new industries develop. Carbon trading market, which is in its infancy today, could end up being one of the biggest markets out there, in 20 or 30 years time. Now it has to be built right so that it has all the protections and infrastructure to make it work like well-regulated, smooth, liquid, effective markets need to operate. But there are going to be industries like agri-energy that are kind of structurally long, and they'll find that challenging to get shorter. But they'll also find new business opportunities to sell stuff, get paid for stuff that they didn't used to get paid for, and so forth. So, the devil's in the details here, based on who you are as a producer or who you are as a business and what industry you're in and so forth. But there's no reason to be in despair or thinking, woe is me, I'm never going to be able to succeed in this environment. I mean, look, market forces are constantly changing for a variety of reasons. It's always been the case, and that always will be the case. The only question is, what are you going to do to stay competitive and stay relevant and change and adapt your business so that you can be sure that so you can be comfortable that you're in the top half of the industry, not the bottom half of the industry.
So I'm curious because I also do a fair amount of work in dairy, and you're obviously very involved as well. But using that as an example, in the big picture, how do agricultural producers like dairy operations try and figure ways to do both parts of the net reduction? So both their own substantive amount of reduction and then offsets through carbon credits and such.
So through the board on which I'm an advisor to the dairy industry, year and a half ago or so, they did a 10-year looking out into the future exercise. To the immense credit of the dairy industry, that's not the first time they've done that. They're very thoughtful in that regard. And that question was one that was addressed. Now, this isn't something you can find publicly. It was a private exercise by industry. What I would tell you though is that there was a lot of emphasis on, okay, how do we find new business opportunities and new revenue sources? So, for example, in the dairy production process, you got all these cows and they produce manure. Well, how do we turn that into electric power, for example? That's a new revenue source that helps to contribute to a reduction in greenhouse gases and so forth. And there are technologies that are available to do that at scale. And I suspect they will continue to grow. The more technically sophisticated they become, the faster they will grow, and the more capital they will attract. So I think the dairy industry itself is looking for ways to reduce the footprint of greenhouse gas emissions on the one side, changing what you feed the cows so that they produce less methane, for example.
Yeah.
To deal with the opportunity to buy and sell on the backside of the process so that you can create new revenue opportunities and so forth. Because you can't do just one or just the other. You've got to do both.
And it's that necessity being the mother of invention, as it were, right?
Yeah. Look, complacency is always the highest risk for any business, right? Thinking that the things that made you successful in the past will guarantee your future success is always a mirage. You've got to be reinventing yourself and adapting to market forces and the adaptation of your business model. And the biggest single driver of change over time through market forces is technological change. And the thing that makes me most optimistic is the fact that we have the most innovative, most dynamic, most sophisticated, most thoughtful, most technologically savvy agricultural production complex in the world in the history of humanity. And when they put their mind to a problem, they're going to figure it out.
I love it. Well, on that note, you've really teed up the top things that one can do today to help improve their business and improve their resilience in this particular area. The first one being, as you said, get smarter faster. And to that effect, I encourage people listening to also join us for our food summit in just 2 days on July 13, at which ESG will be discussed from varying perspectives as well. Second, as you've heard in this terrific presentation from Tom Halverson from CoBank, I think contacting your bankers to determine the information that they're being asked to gather for themselves so that you can start to anticipate the information that you'll be needing to gather. Consider how your business and its carbon impact or mitigation and ways that you can address and document those things. One of the kind of things that really resonated in the last slide for me, Tom, was the overlap between agriculture and energy, because there's so many ways in which producers have wind farms on their farm or are, as you said, generating electric power or methane that can be captured and the like. And then making sure to keep the key constituencies within your organization, aware of and informed about this issue. I think we're in a time of change of the consumer preferences and the speed with which that's happening is really extraordinary. So with that, Tom, do you have kind of final thoughts and recommendations for how to prepare for and manage the risk in this area?
Well, I think I'll end where I started and what I said in the middle, which is this is big and complicated. We all have a lot of learning to do, and it's going to evolve and evolve rapidly. And so, get smarter faster, right? The amount of time and energy that I personally spend trying to get smarter faster in this space is demonstrably more than it was 6 to 12 months ago. And if I'm even remotely right about what future trends portend, everybody who's in a position of leadership is going to have to do that, because the future is going to look different in the past. And if we're going to do this successfully, whatever we do, we're going to have to do things we've never done before in new contexts. We're going to use a lot of tools that we've developed and that work well. They're going to have to be used in new and different ways. So start with knowledge before you start, building things or making bold commitments. I sometimes jokingly say to our board, "Wow, I'm pretty sure I'm retiring before 2050, so maybe I can just make a commitment that we'll be will be do some bold thing by 2050. It's easy to say when you're not the one who has to do it.
Yeah,
But
right.
these bold commitments are going to take decades to be executed, and so we're all going to have a hand in the construction project.
Yeah, exciting times. Terrific. Well, Tom, thank you so much for sharing your wisdom and insight and unique perspective on this fascinating topic. And thanks to all of you for participating in this interactive dialogue.
Thank you. It's been a pleasure.